What's up, guys? Welcome back to UCL Forest Academy. Once again, you're welcome back to UCL Forest channel here on YouTube. So, should in case you're coming across my channel for the very first time, my name is Uche Chimeze Richard, popularly known as UCL Forest. So, in today's lesson, we're going to be continuing from where we stopped on the previous session of the risk management lesson, which is just like the today's lesson is risk management, but it's just like the second session of the risk management lesson that we dropped earlier. So all you have to do is to make sure that you watch the first section of the video. Don't skip that very particular first session. If you skip that very particular first session, there's a high tendency that you will struggle to understand whatever I'm about to explain on today's lesson. Please, if this was the particular content you saw first on my channel, just try and watch the first session, okay? And don't skip it. Don't skip the particular content. This is the real trading itself, and this is what is going to enable you to understand what is trading and enable you to be on profit for a long period of time. Are you that type that keep funding every time? You cannot be able to place a withdrawal. Oh yeah, this content is for you. Are you the type today you make profit, tomorrow you will lose, next tomorrow you make profit, next tomorrow you will lose? This kind of thing. At the end of the whole day, you realize that your money you deposited is even gone. That you don't have anything you don't have anything to go on with. That means this content is for you. You don't have a proper risk management, okay? And also, if you're coming from my free Telegram channel, please make sure you watch this content to the end, because this content is going to enable you to understand how to practice good risk management, and it's also going to help you to know how to follow my trading signals and how to follow my setup. If you're coming from this my free Telegram channel, please make sure that you watch this content to the end. If you have not watched the first content, go and watch it and understand what I said there, because whatever I'm about to explain to you on today's lesson will enable you to know how to practice a good risk management and how to keep a good risk to reward ratio. Most of you here that have been following my signals, some of you normally form the habit to reach out to me on DM to ask me where should we close, this and this, that, those numerous questions like that. Please, I believe this content is going to change a lot of things for you, so that you come to understand the reason why sometimes I will share a trade setup, will make profit, the next one will make profit, the third one will lose, and you say, this guy doesn't know what he's doing. I knows what I'm doing. It is you that doesn't know what you are doing, and that time you feel that you want to revenge the market. The next time I tell you that we are still on profit and you are doubting me, this content will enable you to know why I am always telling you guys that you are still on profit, that you don't know what you are doing, that you're still on profit. Just like what really happened during the weekend, where I shared many trade setup. I shared up like 7 setup on even particular free Telegram channel. On this particular free Telegram, we have the one we share on our VIP community as well. So we had 7 setup and we had 4 straight winnings. There's one I've not included. And in all this thing, you could see our winnings was more than our losses. And this is what some of them fails to understand. And just imagine that you are not really active here. And then at the end of the whole day, you concluded, I don't know what I'm doing. And I posted this thing and you watch this content to the end. I believe by now you should be looking for who to blame, whether it is me or you. Okay, please watch the content to the end. Okay, don't forget, if you have been looking for an online academy where you want to learn Forex from beginners level to advanced level, look at the number on the screen. There's a number displaying on the screen. Use that number and reach out to us on WhatsApp, so that you can get the details and the process for you to choose in terms of registering in our online class. This is the only online class where they are going to mentor you Forex privately and one-on-one. In fact, you don't have to demand for it. This is how we teach. We mentor you privately. We understand that everybody learns at their own pace, and that is why we try to mentor you privately. It gives you room that if you have any question, you are going to ask us, and nobody will be there to laugh at you, or nobody will delay you asking questions. Okay, so please don't forget, for Nigerians, you pay 75,000 naira. For somebody residing out of Nigeria, you're going to pay 80 USD. Take note of that, please. Don't come to my DM and be asking me how much. The price is currently displaying on the screen. Look at the price there on the screen. You have to start the lesson right away. All right, so we stopped at risk to reward ratio, and I was trying to explain to you guys some different types of risk to reward ratio on the Forex market, and some traders that practice risk to reward ratio, where I told you that we have, I think we stopped somewhere around the particular part, where I told you we have we have 1:1, we have 1:2, we have 1:3, we have 1:4, and we have the first trader, which is Mr. A, who practiced 1:1. He made a profit of 10 USD. We have the second trader who practiced 1:2, and he made a profit of 20 USD. 1:3, profit of 30 USD. 1:4, profit of 40 USD. So that means that even if at the end of the whole day they are risking, like their stop loss is like 30 pips, like their stop loss is like 30 pips. I'm sorry, their stop loss is like 20 pips. That means what they should target is what is 80 pips. What they should target is what is 80 pips. Okay, so don't you should take note of that. I explained that in the earlier session of that very particular fixed session. Just go and watch it. I explained every particular part on the first session of every particular risk management. Okay, so these guys, these are different risk to reward ratio. These four friends do keep. Okay, so now we try to understand what will actually happen when the rainy days will come, and whether this risk to reward ratio is going to help them to stay on profit for a very long period of time. Now you need to understand that the psychology behind risk management is that managing your risk is not just about numbers. It's not just about number. It's all about mindset. You see, one thing about this very particular risk to reward ratio is that we have what we call fear, greed, overconfidence. It really affects risk to reward ratio. Okay. Sometimes you see somebody will open a trade, right? Just like what I explained earlier. The person will open it. This is running in his favor, right? He will not want to allow that market to hit TP. That's number one problem. You open a trade now, or you enter the buy or sell on a particular setup like this, and the market is pushing in your direction. The market is in your favor, right? The market is pushing in your direction, about to hit TP. Let's say you went in for a buy around a particular zone. Sorry, this is not for buy. This is for sell. So let's say you went in for a buy around the stop loss below and take profits around a particular zone. Now your this thing is here, and then this market is running in your favor. So you don't want this market to hit TP. You don't want it to hit take profit. Now you are scared. Your risk to reward ratio is 1:, let's say it's 1:3. And this thing is not even up to 1:3. It's running around 1:2. Let's say it's like this. Maybe it's running around 1:2. Let's say you are using 1:4. Let's use 1:4. And this thing is running around somewhere 1:2. Okay. And then you are saying that your 10 USD you risk is now something like 20 USD. Now you are scared. You want to close. Your man is telling you close, close, close. You don't know whether this thing will reverse. So you better close this thing. You better close this thing. And then you're asking yourself, should I close? Should I close? This kind of thing, something is wrong, bro. My friend, something is wrong. The truth of the matter is that if you have decided that your risk to reward ratio is 1:2, you don't have to close this thing. If you have decided that your risk to reward ratio is 1:4, you don't have to close it. The least thing that you can do is to take your stop loss to break even. Okay, take your stop loss to break even. I know it's very difficult that you saw profit at the end of the whole day, the market reverse and hit your break even, but it's better that you did not lose. Or better still, you can trade your stop loss to somewhere around to cover up some profit. I explained how you can be able to cover up some profit on the first session. Just go and watch it so that you understand. So you can trade your stop loss to cover up some profit, so that even if this thing reverse, it will hit you. But this thing will keep scattering your trading psychology, because you don't know whether this is just like a minor retracement for the market to keep pushing to the upside again. That's the truth of the matter. You don't know whether this is just like a minor retracement for this thing to keep pushing to the upside. And just imagine that after hitting your break even, boom, to the upside. So it's really late for you to make a decision. So I will always tell you, number one is, if you are too scared, as now that you are trying to build the confidence as you are trying to build the confidence and your edge, right? You can be using break even. Okay, you can be using what? Break even. Don't close that very particular setup. Allow it to hit TP, because the moment it hits TP, you have been able to secure a profit of other setup. Let's try to explain something here now. Let's try to explain something here. Now, developing a discipline will always help you to stay consistent. Benefit of strong risk management in trading will always protect your capital from unexpected market moves. I'm telling you honestly, it's going to help you to protect your capital from unexpected market moves, and it's going to reduce emotional trading and impulsive decisions. Okay, that very particular moment you have decided, I want to be risking 1:2 or 1:3. The moment the market hits that your take profit of 1:3, the truth of the matter now is that you are out of the trade, and then you're not enjoying your money. But let's say you are not practicing any risk to reward ratio. Your own is that when the markets go up, you buy. When the markets sell, you will sell. This kind of thing is gambling. Okay, you don't have to do that. You have to make a decision now and choose. We are coming to explain more of this risk to reward ratio, but I'm trying to drive it to I'm trying to take you to one particular place. It will enable you to enhance a consistent long-term profit. And then if you try to understand this risk to reward ratio in more this thing, if you are trying to understand if a particular risk to reward ratio, there's something we call, if you are trying to understand give a particular risk to reward ratio in more advanced manner, there's something we call a winning streak and a losing streak. Now you see this part. This part is the part that you really need to work so hard to understand. Now, you know, before I started this video, I told you that the forex market is all about risk. There is no way you are going to run away from losses. If I tell you I don't lose, that means I'm a liar. Honestly, I lose. But the truth of the matter is that my losses cannot be compared with my profit. Okay? The moment I lose, I aim to look for a setup that can enable me to recover my losses. But let's say you lost and the next setup cannot be able to recover your losses. That means you are in deep trouble. Now let me take you guys back to the Telegram community. I shared a trading setup on GDP JPY. The market went 1:4. We made 1:4. It was like around 300 and something pips because I was not using 10 pips stop loss. I was using like somewhere around like 30 something pips stop loss. Then I made 1:4. That market hit full TP. Now we made another profit. We sold again and we're able to make 1:4. Now, how many risk do you want? How many profit do you think we have been able to make? If you combine these two setups, this 1:2, we have been able to make 1:. We are currently on a profit of 1:8. Do you understand? We are currently on profit of what? Of 1:8. There's a place I'm heading to. Don't worry, you are going to learn a lot now. So I'm currently on a profit of what? Of 1:8. The same that week, I shared another trading setup on odd card. Though that setup I was shared somewhere around last 2 weeks, I think somewhere around last 2 weeks. But I had a pending order there. I shared it here on the free Telegram community. I think it's somewhere around there. I think look at the setup here. Look at the setup here. This was the setup, right? So look at it. So look at when I shared the setup here. Look at when I shared that very particular setup. But that setup did not really trigger immediately. It did not trigger. We had to lose the very particular setup. We lost CHF JPY. We lost it, and I think we only lost GDP USD. The very particular GDP USD we lost was not even up to 1:1. It was not even up to 1:1. I'm telling you on the street, it was not even up to 1:1. Then we even lost NZD. I think we lost 3 in a row. But let's assume that I lost 3 in a row, and my total pips loss was 149 pips, and I made a total pips of 836 pips. Now, if you try to compare this risk to reward ratio, they are not the same. If you subtract the particular thing, 836 minus 149, it will still give you 687. There was a setup I've not even included here that we made full TP. Okay, with this very particular lot size with the least loss of 0.1. With the least loss size of 0.1, you have made $68. That is, if you use 0.1, despite all these losses, you were able to still stay on profit of 68 USD. Then what you just lost was 14.9, and your new capital, like your capital, let's say you funded 10 USD, or let's say you funded like 50 USD, you are currently on a profit of 118 USD. Is that not how to trade? That's how to trade. So now let's go back in understanding what this thing is. So now, since my risk to reward ratio is 1:4, then I have a friend who practiced 1:1. Now we ran into winning streak where I was able to make I was able to, the first setup hit TP like this. The first setup gave us 10 USD, second setup 10 USD, 10 setup gave 10 USD. Now this guy was just making 10 USD. He was just making 10 USD, right? This very particular person as well. Sorry. My second friend, sorry, let me remove the particular thing. I'm trying to explain something to you guys now so that you try to understand what I am actually, where I'm heading to, okay? So this, my first friend made 10 USD. Let me drag it up so that it can be on his own area. 10 USD, and then he made another 10 USD smiling. What a good days, right, bro? There's a good days. This sometimes like this, you think that the forex market is all about profits. No, my brother. The rainy days will definitely come. Now we are all on profit. The second person, 20 USD, 20 USD, and then 20 USD. The third person, 30 USD. The third person, 30 USD, and then 30 USD. Now me, 40 USD. I normally practice 40 USD actually. I practice 40 USD. I practice 1:4. It's not like I practice 40 USD actually. So 40 USD and then 40 USD. So this was us on massive winning streak. The moment you hit the market 3 straight time, you're on massive winning streak now. It's easy. So now this time around, we are able to make a profit of My first friend, that this guy, Mr. A, was able to make 30 USD. Now, his current capital is currently at 140. 140. I was able to make, this guy was able to make something like 60 USD. 60, and then, sorry about that. So now this guy was able to make 90. Oh, this my friend was able to make 90, and I was able to make 120. I think if my calculations are wrong, please leave it in the comment section. Okay. So now look at it now. So you can see the profit are not really the same, right? Now let's talk about when we ran into losses. Now when we are now on loss, maybe the next week we came back to trade, and then the next thing now that happened, sorry, I think this guy should be on a profit of 20 plus 60 should be 80. So now you should have 180 as a profit. Now this guy should have 30 plus 90 should be giving you around 120, right? So that this guy should be on a profit of 122, right? It should be on a profit of 122, right? It should be on a profit of 122, 120 USD. And then this guy actually need to be on a profit of you need to be 40 plus 40 plus this should be 260, right? So you can see these are our different profit. Now then the next week, now we started trading. The next thing that happened is that we experienced what we call losing streak. You think I'm going to skip that part? This is what you don't want to hear. This is what you don't want to hear. This is the bitter truth. You don't want to admit that it happens on the forex market, and it's definitely going to happen to you. You cannot run away from it. It's not like a prophecy I'm giving to you, but no matter how good your strategy is, you're certainly going to experience what we call losing streak. Okay, now look at it now. So now we lost 10 USD. Now he has equally lost 10 USD again. He has lost another 10 USD. He has lost another 10 USD. And he has lost another 10 USD. Now we lost like 4 in a row. And this guy, how much do you think he has not lost? Definitely he has given back all his profit to the market. And then even the fourth one now, he will be scared, because the moment you're now on losing streak, you are going to be very, very scared to open the fifth one, because you can see 10 times 4 is 40. He has lost all his profit to the market because he was busy practicing 1:1, 1:1. Now this guy would be the type that normally close trade very early. The moment he reached 10, he see 10, he said, "There's a good day. I'm done." Then this guy, he just lost minus. Let's just write this way, minus 40. Because all of us are keeping that the same risk to reward ratio, that the same stop loss, minus 10. This guy as well lost minus 40. The same people as well lost minus 40. And this guy, which is me, I lost even minus 40 as well. There was no room to increase loss size. So there was no room to increase what? Loss size. We are all doing these things, right? So now, you can say now that we are now, if you're minus 40 from 220, I am currently on a profit of 220. My friend is on profit of minus. My friend is on profit of. My friend is on profit of 180. I think something 180. Then this guy is on profit of 140. Now who is fooling who? Now at the end of the whole day, all of us that had different runs, one person ended up with nothing, and one person is still on massive profit. Can you see the reason why I said that we are always on profits? We give a particular simple example. Can you see why I said think of when you use bigger lot size, we are still on massive profit? That's what risk management does, my friend. You cannot compare your losses to your profits. Okay, you can see now why I said we are on profits. So this is how to practice a good risk to reward ratio. So should in case you are planning to use 1:1, always remember that the rainy days will come, and when the rainy days come, how will you manage it? And always remember that if you practice 1:20, 1:2, that there's a higher tendency that you can still be on profit. Okay, but the best thing I will always encourage you to do is to practice at least 1:3 or 1:4. At least it will be able to save you when the difficult days come, because they will definitely come. They might not come straight in a row. Sometimes it might even last like 10 setup. It will shock you. You bleed the account. if care is not taken. If you don't have a good risk to reward ratio, you might end up, just imagine that we keep on trading and then maybe we lost like 10 in a row. This guy will be in deep trouble. Okay, so this is what good risk to reward ratio will actually work for you. It will enable you to stay away from, it will enable you to, it will actually keep you so far from large drawdown and will not cause emotional stress or increase your leverage. That is what good risk to reward ratio will actually do for you. All right, let's try to also understand when to trade and when not to trade. When to trade, actually, I mean when to trade and when not to trade. What I mean is what? It's not every day you come to the chat is the day you are going to take a trade. That's one thing you need to know. And that's number one thing all of you here on my free Telegram channel need to know. It is not every day you expect me to drop setup. That is why every time we make profit, try and go and rest. Try and go and rest. Okay? You don't need to be seen on the chart every time. Do you understand? Maybe the next day, if I did not share anything, just take it like that. Okay, it's not every day you need to trade. Every day, if you trade every day, there's a higher tendency that you will always be losing. Okay, let's say your strategy is, let's say you normally trade something that your strategy is break and retest. Like, let's say your strategy is this. Whenever the market push to the upside, you want to see a break of structure, then you always trade break and retest. Then before you trade that break and retest, you want to see something that look like this in front of it. You want to see something like inducement in front of that very particular breaker block or resistance turn support, right? That is what you want to see. And at the end of the whole day, you saw this thing on Monday, you were very convinced that this is my setup, you were not scared, and you went in for a buy like this. This is not my strategy, I'm giving you an instance. So you went in for a buy like this, and the next thing that happened is that the market came, tag you in, and then hit your TP. Now you made 1:4. You are smiling. So since you made 1:4, you have to exist that very particular day, or else you have other setup, or else you have other setups. It can happen like that, or let's say you have other setup. And let's say you came on, let's say on Tuesday, you saw something that looked like this. The market just hit your setup. The market just hit your TP. Let's say the market just hit your, I'm going to delete this thing, please. I'm going to delete these things. So the market just hit your TP like this, and then you came on Tuesday. You normally you want to see inducement, you want to see something that look like this. This is your setup, right? But because you have formed the habit of trading every day, the next thing you saw the market doing something that look like this, and then you say, okay, this you saw it, then you concluded that this is a trade setup, that there's a setup here, that this is a setup. I think I should go in for a buy here. Now, is these two things the same? Are they the same? They're not the same, bro. They're not the same. If you are trying to do this kind of thing, number one thing is that you are always going to find an excuse, or you're going to find something to give yourself confidence. It's either you start drawing trend line like this. You say trend line breakout, or this, as in you are going to definitely find a way. You're going to find something that will give you the effrontery, or that will give you the mind to set a pending order here. That's the truth, though. Exactly. Or maybe you tell yourself the market is about to fall. After is a BOS, you need to return back. The moment you are doing this kind of thing, that means you don't even know when to trade. When you come to the chart, you see this kind of thing. There's no trade setup. You have to leave. You have to what? You have to leave. If it is not there, it is not there. If it didn't there, it didn't there for Nigerians. Okay, so then you need to know about this. So you don't need to be trading every day, because it is very, very important when only your setup align your strategy. And this thing will always make you to avoid FOMO, or avoiding over trading and FOMO entries. Okay, because the moment you start taking such setup every time, you want to be you be feeling the fear of missing out, which is FOMO. Okay, the next thing there is what? The pressure of trading and forcing trade, which is still something that look like this. Because the setup is not there, you are forcing, you are going through, from you move from BTC to GDP, from GDP to German, from German to, but you can even go as far as you will try to do all sorts of magic. If you go through all those pairs, if you take all those pairs, you did not see this thing, you will definitely see trend line. Today you are a breaker block. Today you are a breaker block trader. Next tomorrow you are a support and resistance trader. Next tomorrow you are an SMC trader. The new day to come, you are, sorry, I don't know, but let's say on Monday you are a support and resistance trader. Then on Tuesday you are an SMC trader. On Wednesday you are a trend line trader. break break and retest. On fourth day, you are an ICT trader. On fifth day, you might even form another strategy and call it a name. See, let me tell you, what you are doing is that you are just exposing yourself to the market every day, and you will definitely not make a sell. And let's try to understand a particular concept about a particular not trading every day. Let's say you have a shop in the physical market, then you went to your shop, you sold, right? You sold on Monday, you sold on Tuesday, you sold on Wednesday, then on Thursday, there was nothing, there was no customer. Customer did not come. Remember, you fueled your car and went to the shop, and then there was no customer. You had to eat, right? You ate in the morning, you ate in the afternoon, you eat in the night, in the evening, and then you pay some different thing in the market. Then when you are going back home, you need to get some certain things for the family as well. So these things you are spending that time could be lost, but it's not really lost because you made profit on Monday, you made profit on Tuesday, you made profit on Wednesday. So on Friday, if on Friday you still did not sell, the profit you made in those 3 days is covering what you are spending now. It might not really cover what you are spending now if you were busy selling at cut price. If you are busy selling your products just for you to sell, for the name of selling, for just that I just want to sell, you are not making any profit. On the rainy days, you are going to suffer. That's number one thing. So you can see that these two things work even on the market and the physical market. So why are you fooling yourself, bro? So now let's proceed. All right, let's move to capital management and let's try to understand what is capital management. After the capital management, I will be explaining what is this very particular thing, avoiding emotional trading, which you're going to understand something there. So now let's talk about capital trading, capital management, or something like that. So now, this very particular part, I just want you to understand that I'm not trying to affiliate anybody. The truth of the matter here is I'm not trying to like to promote any stuff. I'm not trying to promote anything, but I'm just trying to share a vital information to you guys. Just like as I've been spending how many minutes now it's explaining to you guys what is risk management. What I'm giving out is what almost 100 USD or what more than. This is what you pay some people $1,000 to learn. This is what you spend so many time on Zoom calls trying to understand. And I'm giving out this thing to you guys for free here on YouTube. So please, whatever I'm about to explain now is not a promotion of anything. It's just to help you and to help those that doesn't have any capital to trade forex. When I mean don't have any capital to trade forex, if you have 10 USD to trade forex, number one thing is that you are going to struggle. Just know that one. You are going to struggle. You might have a very good strategy, but what I'm going to explain to you now, you are going to see why you are going to struggle. Honestly. But if you have a very good capital, there's no problem. I'm still going to show you how to scale up those capital in even particular words lesson. All right, let's proceed now. So when we talk about capital in trading, it's very important to have a large capital in trading because small capitals will always affect your psychology. To be truth, it will always affect your what? Your psychology. Now let's say that we have Mr. A who have 10 USD. We have Mr. A. This guy has 10 USD as a trading capital. He has a friend, very rich friend, who has something like 100 USD. He's rich. Actually, it's not easy to have 100 USD. Then we have the third friend who actually have something like we are going to stop at this third friend who have over 500 USD. Very good. Let's just leave it here. Okay, these are like three friends who came to the forex market and they learned together and they want to start trading, right? And then when they started trading, they have a very good strategy. It's not that they don't have a very good strategy, they have a very good strategy, right? But the truth of the matter now is that they opened the first setup and these people had an intention to be risking at least 10 USD, 10 USD, right? These people had an intention to risk like maybe like let's say it intend to risk like $2. Let's just use that word. He intend to risk like $2 per trade. That's what he wants to risk, okay? And then this guy actually wants to risk 10 USD per trade. And this guy wants to be risking at least, he doesn't want to risk more than 50 USD per trade. That could be like their trade setup or whatever. That could be like what they want to risk and each entry they want to go. Okay, they want to enter. So now this guy entered the first setup, he lost suddenly, he lost. The second setup, he won. It happens, right? He won. And anytime he reached $2, he intends to make like 6 USD, right? He made 6 USD. He's very happy. And if you try before that time he lost this particular minus $2. He's now his capital is now $8. Finally, he made a profit of $6, which is this profit of $6. And now his new capital should be somewhere around I think somewhere around 14 USDs. I think, right? 14 USD. Now let's say this guy had a series of losses. Now let's say this guy had a series of losses because it normally happens. He went into losing streak. You think it doesn't happen? You think it because I'm saying this losing streak is because of the sake of this particular video? It is definitely going to happen. Whether you like, you want to wait, it's going to happen. As long as you are trading forex. If you say you have never experienced losing streak, if you meet any trader that said he has never experienced losing streak, I advise you, it's better you run because that person is not telling you the real truth. I'm telling you the real facts. Now let's say this person had a series of losses. He lost like 6 in a row. He lost like 6 setup in a row. That 6 setup he lost in a row is almost like 12 USD. I'm telling you. Or like he lost 6 setup in a row. That 6 setup he lost in a row, 2 times 6. 2 times 6 is 12. Is minus 12 USD. Now his new trading capital will just be, I think, 2 USD. It's very dangerous. Honestly, it's very, very dangerous. This guy will not even have the mindset to open another trade, all because his capital is already gone, bro. He's gone. He will not even have the confidence again to say, let me open the next trade. Because if he wants to open that trade, he'll be thinking, what if I lose? Or let's even say that it is, or let's even say he had a loss, because some people say that you are trying to favor something here. Let's say he had a straight losses of 4 times. Let's say four times, and I think that should be 8, right? 8. His new capital should be around 6 USD. That's his new capital should be around 6 USD. Now this guy has experienced a very deep drawdown. So he might not even have the mindset to open the 5th one or maybe the 6th one. He wouldn't even have the mindset because the capital is almost gone, bro. And then the 5th one, the setup he has already made, something that he has already analyzed and kept. He came back in the evening and saw that the market has hit TP, and then he was supposed to hit plus $6 again. And if he had took that setup, he could have recovered almost this $8 and it will remain $2. Now, this will come a time he'll be regretting. He'll be regretting because there was not really enough capital, and this capital really affected his psychology. Okay, it really affected his what? His psychology. But let's say you have 100 USD or you have a 500 USD. Sometimes with 100 USD, depending on the lot size you want to trade, some of you will have 100 USD, and because you are not okay with $6 or $12 profit, you want to use something like 0.1 in that particular 100 USD, and that's your 0.1. That's your 0.1. Your stop loss is like $20 now. Your stop loss is like $20, and then your take profit is like 60 USD. Now that market hit your stop loss. You are now on currently, what's your new capital? Your new capital I think should be around 80 USD. Now all of a sudden again you lose again. Problem don't come. Problem has arrived, and now you will not be on 60 USD. Now, if you finally lost the third one, you're not going to find yourself in a very deep drawdown, which is now going to be what? 40 USD. Now, this is how this thing will keep on affecting your psychology. What about this one? The same thing as the capitals are getting big. But the truth of the matter is that I think somebody that has up to like 500 USD doesn't really have any business with what I want to explain now. But if you have 100 USD and you have the mindset to grow from small to small, as in to grow small, small, that means you are definitely going to last long. But if you are using 0.1, you should know that you have to reduce your lot size. You have to reduce your stop loss. You have to use tight stop loss, because the moment you're using 0.1 on a $100 account, that means you need to use a tight stop loss. If you use a wider one, trouble. You are inviting trouble in your trading plan. Okay, so now let's talk about how you can be able to get a trading capital as somebody who is suffering from getting a trading capital. And I'm going to be explaining to you how you can still be able to come out in profit. Okay, now let's explain. So we have a particular profit. I'm going to be taking to profit. It's profit. So we have a profit we call MAVEN trading. Although we have numerous profit there, we have fundedness, we have fundedness, we have different profit there. All right. So the reason why I'm introducing you to profit is that profit is the only way you can be able to get a bigger capital. Now I know that this time around you guys are already ending the video because you're already ending the lesson. See, anything that concerns profit, I'm not going to be a partaker of it. Some of you have already vowed that once you mention profit again in my life, I'm going to change it for you. All these kind of things, right? Don't worry. I'm going to explain to you some hidden things you don't know about profit and how you can be able to pass profit. Should in case if you are suffering from capital, but if you have enough capital, I think you just have to stop and then maybe you can skip some part of the particular video and then watch to the end of it where I'll be explaining the emotional trading of a stock. Okay, now let's talk about the very particular problem of a stock. Now, when you don't have a good capital, I encourage you to come to MAVEN. MAVEN is very cheap. The reason why I'm referring to MAVEN is that MAVEN is very, very cheap. This is the only problem I use, and they don't have any business. As in, I've never actually like experienced anything like you made a profit and they failed to pay you. I've never seen something like you pass an account rightly and they refuse to pay you. No. Please, after this very particular video, I'll be dropping some of the profit rules on this very particular free Telegram channel. All you have to do is to go to the free Telegram channel. Go to the free Telegram channel, and then you're going to see a video I dropped there concerning all their rules. Maybe I did not fully explain it here, but I'm going to explain to you how all these things, all their like their price, their rules, their hidden rules as well, which you don't know. I'm going to explain it there on that very particular what video I will drop on that very particular Telegram community. Okay, so now let's look at the account size that MAVEN has, or maybe this is the first time you're hearing about Profem. Profem are like an organization or company that are there to fund you. They are there to do what? To fund you. They are there to fund you, to give you capital. But the truth of the matter is that you have to prove to yourself, you have to prove to them that you're a trader. You have to do what? Prove to them that you're a trader. How do you prove to them? Is by you passing the challenge. I know it's difficult, right? But with the help of the very particular risk management lesson I've given to you, now look at how you can be able to pass. Now, in this very particular MAVEN, they have different type of accounts. They have 2K accounts, they have 5K accounts, they have 10K accounts, they have 20K accounts, they have 50K accounts, and they have 100K accounts. Okay, these are like different account size they have here, and it all depends on the one you want to get. If you want to get like this one of 2K account, the least account they have here is 2K account, which is 15 USD, right? They have different steps. They have 3 steps, they have 2 steps, they have 1 step. So what does this thing stand? When we talk about 3 steps, it means that you are going to have 3-phase challenge, right? You're going to have 3-phase challenge, which is like the total amount of money they want you to get in the 3-phase challenge is 600 USD. Is what? Is 600 USD. That means in the first phase, you are expected to get 60 USD. In the second phase, you are expected to get 60 USD. And in the third phase, you are expected to get 60 USD. The moment you make all these particular profits, I think the moment you make the particular profit, you have been able to pass 3%, 3%. You have been able to pass the particular what 2K account. Sorry, I was trying to talk about this particular 5K, but for the 2K account, you are expected to make a profit, a total profit of, if you take 260 plus 260, I think that is a total of 250. I think a total of 250. A total of 180. Sorry, so 60 times 3 is 180. So when you purchase an account of 2K now, and let's say you bought for the 3K, you bought for the 3-step challenge, you need to understand that you are expected to make 60 USD in the first phase, 60 USD in the second phase, and 60 USD in the third phase. Okay, it's not really difficult. All you have to do is to analyze your chart and then try to have a risk to reward ratio. Maybe on the first phase, you are going to target 1:3. 1:3 is that if you reach $10 or if you reach like 20 USD, you have to target 60 USD. Do you know that? Let's say you came to the chart and then you are using 1:3, and then they say you should get 60 USD. What they gave you in the first phase, let me be honestly speaking with you. What they gave you in the first phase of that very particular account, I think it's like 40 USD. That's the daily drawdown. Okay, that's the daily drawdown. The daily drawdown there is 40 USD. The overall drawdown is 60 USD. Okay, that means if you lost $40, that means you have already breached the rule on that very particular day. So since they are giving you 40 USD as a daily drawdown, all you have to do, number one, although I'm not really explaining this profit well, just go to the free Telegram community. I have already dropped a video where I specifically explain everything about the particular MAVEN. Go there and watch it. Okay, now look at it now. So when we talk about the particular stuff now, when we talk about the particular daily drawdown now, the particular daily drawdown is like the expected loss you are expected to make in a day. If you lose more than that, you're already on trouble. So you don't have to lose more than that very particular what stuff. So they gave you 40 USD. You came to the chart. All you have to do is to divide this 40 USD into 4. which is 10 USD, which is what is 10 USD. Now you need to make sure that your stop loss is not above $10. No matter how big your stop loss is, let it not be above $10. So let's say now you have a stop loss of 10 USD. Now aim to get like 30 USD, which is 1:3. Now, the moment you aim for 30 USD, which is your take profit, allow the market to hit your take profit. Allow the market to do what? Hit your take profit. If you happens to gain, if you happens to win the first setup, that means you are already remain just $30 for you to pass it, for you to pass the first phase. But let's say you run into like you want like 2 times in a row. That means you have passed the first setup with just keeping a good risk to reward ratio. But if you use 1:1, it's going to be very difficult to. If you close your trade very early, it's going to be very difficult to. If you do this, what they call it again, if you open a trade now and the market is running in your favor and you don't allow it to hit TP, it's going to be very difficult for you to what to pass. Okay, and please, what I want to tell you guys is avoid closing a trade immediately you open it. One of the hidden rules about Profem is what? Don't ever close that trade within 5 minutes. Allow that trade to pass 5 minutes. Even if you are trading from 5 minutes, allow the trade to work to pass 5 minutes. After 5 minutes, you can close that trade. Okay, they will not consider it as scalping. And avoid news trading. When I mean news trading, it's not that you cannot trade news, but if you want to trade news, you have to be on that news like 3 or 5 minutes before that news. You have to be on that trade what 3 or 5 minutes before that news. I'm saying this thing for those that doesn't have capital. But let's say you also want to trade the news, set a pending order before the news. It's not when the news is coming out you are entering. They will consider it that's a what that you are gambling. Okay, I have other rules I stated on that video that I will drop on Telegram. Go and watch it. Okay, so you can see with just $15, with just 15 USD, you have purchased every particular 3-step challenge, and all you have to do is to get 180. And then with 19 USD, you have also gotten what? The two-phase challenge. In this very particular two-phase, what you are just expected to get, I think the total money you expected to make is not really much, just 160. 160, just like $20 difference. This one is 180, this one is 160. Why this one is just one? This one is just one phase challenge. This one is 160. When we go to 5K as well, some other profits you're going to see their 5K is like 38 USD, 38 USD. Some other profit 38 USD. Someone said you will see 50 USD as their 5K. Why doing that when you can be able to come to MAVEN and purchase it as very cheap? If you're still struggling with your psychology, come here and build yourself. With 19 USD, imagine they sold a profit for you at 38 USD. All you have to do, divide that 38 into 2. Come and buy this very particular 3-step or this one. You still have change to sub your phone or to sub your data or to do what or to have money to feed yourself while you are trying to pass the challenge. All right, I forgot to also tell you guys that if a particular MAVEN have a two trading platform. They have a match trader, they have a C trader. When you use match C trader, it's very costly. C trader is 39 USD, but match trader is 19 USD. There is no difference between C trader and match trader. The only thing there is that some people just use C trader because it's more like advanced trading platform, but it's nothing. You can make use of match trader for a beginner. Okay, this is for those that doesn't really have capital. Please, I'm begging you, if you don't have any capital and you have a good strategy, all you have to do is to come to MAVEN. Use the link you are seeing on the description below. Go to MAVEN and what? Register and do what? And register or get an account to them. Believe me, when you get an account to them, you are not going to regret it. You're not going to do what? Regret it. As far as you are keeping this very particular risk to reward ratios, you will definitely pass the account. Just follow all these rules I've stated, and there's a higher tendency you will pass the account. One thing I want to tell you guys is avoid emotional trading or emotional pitfalls. You see that habit of increasing lot size. You have to run away from that habit. Just because you ran into numerous winning streak now, you were on winning streak of like, let's say you made, around that very particular place we are. What was that very particular place? I think we are somewhere around here. Okay, let's say you ran into winning streak, you made 30, you made another 30, you made another 30, you made another 30. These are like the winning streak you had in a row, right? And you made another 30. Now, in the next setup, you are feeling overconfident. You feel you have arrived. You feel you know what you are doing. Then you wait and increase that lot size. Right? You went and increased that lot size. The truth of the matter is that, are you even thinking, what if I lose that setup? No matter how overconfident you are feeling in trading, you need to keep to your trading plan. If you want to increase the lot size, I advise you to also increase your capital, because you don't know what is going to happen. But even increasing lot size cannot just come once. You need to build a very good trading capital before you can increase your lot size. Now, if you decide to increase lot size here, now look at what's going to happen. Let's say you lost that very particular trade, and that lot size you increase could be that the stop loss is like 90 USD. It's like 90 USD is now the new stop loss. And the new take profit now is no longer 30, but it's now somewhere around, maybe you still targeted 1:3 your feet. You are very happy. You've targeted 270, and you feel it's going to work. And this thing reverse and hit your stop loss. You lost 90 USD. Remember, you have been losing just 10 USD. All of a sudden, you jump 20, you jump 30, you jump 40, and you arrive at 90 USD. This can be so crazy. Some of you might even increase some of you can even increase the losses to 30 USD, and then you lost at once. You will lose your mind. Immediately you lose your mind, or maybe you might not even lose your mind at that particular part. You still want to go again, and you lose. That is now when the trouble has started. And this is the time that you no longer, you keep on fighting the market. So increasing your lot size will make sure that you fight the market. Increasing your lot size will always tempt you to fight the market the moment you lose a trade. Okay, you should know about that. And also, remember that increasing lot size are part of greed trap. This is going to make you what? This is going to scatter your trading psychology. It's going to scatter your what? Your trading psychology. All you have to do is to keep a good risk to reward ratio. Even if you want to scale up your account, there's a video I did on market structure. On YouTube. Come down to playlist. Come down to market structure VIP lesson. Spend your time and watch all the videos that are on a particular playlist. Spend your time and watch it. After watching that very particular video, then come back and do these very particular things I want to tell you. If you want to scale up your capital, let's say you have a trade running like this, the market pushed to the upside. You might not really understand this thing if you have not watched that very particular market structure video. Okay, the market actually broke its structure. Now the market returned back, mitigate the extreme POI like this. Let's say the market mitigates the extreme POI like this. Now let's say the market mitigated the extreme POI, and then the market is now pushing up, now retrace, went up again, changed character, and then the market wants to return. But anytime the market change character, you need to come back before pushing up again. Now, if you want to scale up, all you have to do is to open another order here. Open what? Open another order here, because this is an unmitigated zone, and this is a zone where the market is likely to react from. So you open another order here, which is now mean you have two orders running. You have the first order here, you have the second order here. So this is what we mean by scale up. You are scaling your profit. Okay, so the moment the market mitigates the particular level and start pushing to the upside, finally hits take profit, you have already won 1:4. Should in case if you are targeting 1:4 on each of your trade, you've already won 1:4 into two phase. Okay, the first trade hit TP, and the second trade actually hit TP. Okay, please, if you don't know how to do this thing, I want you to go to the market structure VIP lesson, and then definitely you are going to understand it. But let's say you still don't, let's say all these things are very difficult for you. Always remember the VIP class is there. Although we have extensive way we are going to explain all these things for you, but here on YouTube we cannot really spend time. If I want to explain everything for you here, it might even reach like 2 hours, which you might not even want to watch. Okay, so that's why I encourage you, please use the number you are seeing on the screen and reach out to us and join. It's not even up to 50 USD for those in Nigeria. It's not even up to 100 USD for those outside countries. So what is wrong, bro? What is wrong? You have to join. Okay, so all these things I've explained on today's lesson is certainly going to help you, or certainly going to assist you in keeping a good risk to reward ratio. Never increase your lot size for any reason, whether you are massive winning streak or whether you are on drawdown. Never increase your lot size. And don't forget, there's a video I'm going to be dropping on the free Telegram community. Use the link on below. Use that very particular link. Go to the free Telegram community and then watch that very particular. That video will explain everything about profit. There are hidden rules, the ways even this MAVEN I'm telling you operate, and how you can actually pass the account. Okay, I'll be dropping that on the free Telegram community. And as well, please, if you did enjoy the particular lesson, if there was something you actually understood, please I advise you to, or I beg you, or I plead of you to like and subscribe to the YouTube channel. I plead of you to like and subscribe to the YouTube channel. Turn on your notification button. Please don't forget to share the video. Don't forget to share the video and leave a comment and also like the video. I'm gonna be ending the particular lesson here. So please, if there was anything you understood, please do well to drop it on the comment section. Thank you and may God bless you.